Hello, Travis with Tetelestai Bookkeeping and Tax. Going to talk today about a common question, and that is deducting a vehicle and the associated loan or lease when it is purchased in an individual's name. This is common with sole proprietorships, LLCs, especially when they're starting out. It can be very difficult to have credit in the business name. So let's look at this by walking through the Schedule C. So when you can see it's for profit and loss for a sole proprietorship, and this is part of the Form 1040, which is your individual tax return form. LLCs also are disregarded entities, so they flow through to the Schedule C, and you would use this. This will help answer that question about the vehicle and loan or lease, as well as other issues. So you can see there's basic information about the business here, the accounting method, if you use accounts receivable or not, if you have sales tax or not. Question about material participation mainly relates to in practical use real estate, and a few other questions that are pretty self-explanatory. Now, here's where you would start entering your information, your gross sales, and then refunds, returns, discounts, that would go here. Then you have, this would be your gross revenue, your net revenue, and then your cost of goods sold. And that would be, if it's a business selling material items, if you're selling widgets, you're keeping inventory on the different parts going into the widgets, that's pretty basic and simple, and that's how most people think about it. I would argue for cost of goods sold being anything that's directly related to producing income or revenue. So let's say you're a construction business, that would be your lumber, for example, everything that's going into a certain job or project. That would be another indicator. If you want to track, and if you could track expenses by project, then that would be a great line item. And then that will give you your gross profit and your gross income. Now, here's the categories that you're going to want to track, whether it's in QuickBooks Online or a spreadsheet. Google Sheets can do quite a bit, especially if you use pivot tables. You can see another video I did on that. These are your basic categories, and I would encourage you to use these basic categories as is in QuickBooks or your spreadsheet. If you do want more detail or to customize it, of course you can do that. But the more you do that, you're going to have to translate between the two come tax time. So unless there's a good reason, I would leave them as is. For example, advertising. Maybe you advertise on Facebook, you advertise on Google, etc. I mean, I don't really see a reason to separate those on your chart of accounts in QuickBooks or your spreadsheet. If you want to track, say, your profitability or the leads and how profitable the leads are from your advertising source, really not the place to do it there. It'd be best to track that separately and leave your chart of accounts more basic. Otherwise, it gets really messy. Then you have the car and truck expenses. So this relates directly to the question about a vehicle purchased in an individual's name. Now, if you had an S corp, then this would not be an option. But with a sole proprietorship, that would be something that you can put down. So it could be the purchase of the vehicle, all of the actual expenses, gas, oil changes, repairs, etc. What else? Registrations. And you would also track your mileage. And you can put in your actual expenses, you can put in your mileage for the standard deduction there, and the software will compute which one is greater. So you don't need to worry about that. But just track your miles. If it's a vehicle that's used partially for business and partially for personal, then you need to track your mileage separately. You could track, you'd say, hey, it was used 50% for business, 50% for personal. Commissions and fees, pretty self-explanatory. Contract labor would be typically someone you would send a 1099 to if you paid them $600 or more. Depletion and depreciation, a little bit too detailed to go into here. Insurance, again, this would be any kind of insurance that is related to the business. Could be auto insurance, could be business liability, property insurance, interest on any loans, mortgage, legal and professional services. So not just an attorney, it could be an accountant, a bookkeeper, notaries. And then office expense is really a type of catch-all account. So you can put a lot in there. And then these items, vehicle, machinery, and equipment, typically wouldn't be just a business vehicle. That would be over in the car and truck expenses. Repairs and maintenance could be a property. And then supplies that you're not including in cost of goods sold. So these would be supplies, think of administration. So, or back to the construction company example, you are buying tools. Well, tools generally you're not linking to a specific project, a specific property you're working on, etc. You're not saying this drill that I bought for $100 is producing $1,000 of revenue for me from this project. It's more general. Taxes and licenses, pretty broad. Now remember, this wouldn't be individual personal income tax, and a sole proprietorship doesn't pay business tax. So this would be things like property tax if you have a property as part of your business, licenses, renewing your LLC, that kind of thing. And then travel and meals, pretty self-explanatory. Utilities, again, for your business building, or if you have a home office, it's something used exclusively for your business, you can write off that portion of your home, the utilities, your home office. So those are your general categories. And remember, it doesn't matter what type of business you have. If you're a sole proprietorship, it's all going to flow through to the Schedule C. And these are always going to be your general categories that you're going to want to track throughout the year. So a lot of your work is going to be tracking and totaling these up from your prior year. You should be doing it monthly and running a P&L in a balance sheet anyway, but also for tax purposes, annual totals. And you'll total these up. And here's for tracking cost of goods sold and inventory. You don't have to do that for most people besides their business. And it's probably not worth it for you to do that here. There's some more questions about the vehicle specifically, and you can list your own expenses and business categories. So that should answer the question about a vehicle purchased in your individual name and a loan or lease associated with it, as well as some of the general categories and the Schedule C as part of the 1040 and how that works along with a sole proprietorship or other entity that's not filing a separate return from a personal tax return. Any questions, just post and I'll be happy to answer. Thanks.